China's economic slowdown is a significant event with far-reaching implications for the global economy. In this video, we'll discuss what this slowdown means for all of us, breaking down the complexities into easy-to-understand insights. Stay with us as we cover the potential impacts on trade, markets, and everyday life. China's economic growth, a shift in momentum. China has long been known for its remarkable economic growth, transforming from a largely agrarian society into one of the world's largest economies in just a few decades. However, this impressive growth has recently hit a significant roadblock. The slowdown in China's economy is primarily due to a combination of factors, including a serious property crisis and persistent deflationary pressures. The property market, which has been a major driver of economic expansion, is currently facing challenges that are expected to continue into 2024. As a result, many experts do not anticipate a meaningful recovery in this sector anytime soon. The current economic situation is concerning, as China is experiencing its deepest and longest period of deflation since the Asian financial crisis of 1998. This means that prices for goods and services are falling, which can lead to reduced consumer spending and lower business investment. Over the past year and a half, the Chinese stock market has seen a staggering loss of around $6 trillion in value, reflecting widespread investor uncertainty. Additionally, unemployment rates are rising, particularly among young people, which poses a significant challenge for the future. As these economic issues persist, they raise important questions about China's growth model and its ability to adapt to changing circumstances in both domestic and global markets. Global impact of China's slowdown. China's economic slowdown is having a significant impact on the global economy. As China's growth slows down, it affects various sectors and regions worldwide. When China's economy slows, it leads to reduced spending by Chinese consumers, which directly impacts luxury brands like Louis Vuitton, as they sell fewer handbags. Similarly, tech giants such as Apple experience a decline in iPhone sales due to the economic slowdown in China. Moreover, China's investments in other countries are also affected by the economic slowdown. For instance, China's investments in rail projects in Africa and ports in Europe are decreasing. This is because China has been a major driver of global economic growth for the past 2 decades. As China's economy surged, it created a massive middle class that fueled the demand for international brands across various industries, including automotive, technology, and cosmetics. However, as China's economic growth slows down, it is becoming a concern for the global economy, as many countries and businesses have become dependent on China's economic strength and consumer demand. The roots of China's economic boom. China's incredible economic growth over the past few decades has been nothing short of remarkable. The country has transformed itself into a global manufacturing powerhouse, with its GDP regularly seeing double-digit growth rates. In 2010, China surpassed Japan to become the world's second-largest economy, a testament to its rapid development. One of the most significant impacts of China's growth has been the massive migration of people from rural areas to cities. Millions of individuals have moved to urban centers, lifting themselves out of poverty and forming a burgeoning middle class. This shift has had far-reaching consequences, not only for China itself, but also for the global economy. Many multinational brands have benefited greatly from China's rise. For instance, Volkswagen, a German automaker, saw its sales in China skyrocket from just over 500,000 cars in 2005 to a staggering 4 million by 2019. Similarly, Apple, the American tech giant, experienced a meteoric rise in its Chinese sales, which grew from nearly $13 billion to close to $70 billion within a decade. Even Estee Lauder, a renowned cosmetics company, found that most of its sales growth by 2018 was coming from China, highlighting the country's importance in the global marketplace. The impact of the pandemic and geopolitics. However, The COVID-19 pandemic and geopolitical tensions have brought this growth to a halt. The COVID-19 pandemic and rising geopolitical tensions have significantly impacted China's economic growth, which had been on an upward trajectory for many years. To control the spread of the virus, China implemented a strict zero COVID policy. This meant that even a small number of infections could lead to large-scale quarantines and testing efforts. As a result, businesses, factories, and entire cities were forced to shut down, disrupting daily life and economic activities. These shutdowns not only strained the economy, but also led to enormous costs for the government, which had to invest heavily in public health measures. In addition to the pandemic, geopolitical tensions, particularly with the United States, have further complicated China's economic situation. Tariffs imposed by former President Donald Trump, along with restrictions from the Biden administration on China's access to advanced chip technology, have discouraged foreign investment. These actions have made it more challenging for Chinese companies to thrive in a competitive global market. Compounding these issues is a significant property crisis within China, which has shaken public confidence in the economy. Many people are worried about their investments and the future, leading to a sense of uncertainty that is difficult to overcome. Together, these factors have created a challenging environment for China's economy, making recovery a complex and daunting task. Personal stories and broader implications. The economic landscape in China has shifted dramatically, affecting many individuals like 36-year-old Stephanie, who dedicated her career to helping companies navigate the complexities of entering the Chinese market. For years, she enjoyed a steady career with the expectation that her quality of life would continue to improve. However, the unexpected economic slowdown in 2023 turned her life upside down. After being laid off due to company downsizing, Stephanie found herself in a challenging position, forced to accept a lower-paying job as an insurance agent. This not only impacted her financial stability, but also her sense of security and future prospects, highlighting the precarious nature of employment in a fluctuating economy. Youth unemployment is another pressing issue that has emerged from this economic downturn. Young graduates like Wei Xiong and her girlfriend are now facing a tough job market, which requires them to be extremely cautious with their finances. With fewer job opportunities available, they must prioritize their spending and make difficult choices about their careers and lifestyles. This shift in consumer behavior among young people in China has broader implications for the global economy. As companies that once thrived on China's rapid growth begin to struggle, the ripple effects will be felt worldwide. Reduced spending from Chinese consumers could lead to decreased tourism and economic activity in other countries, creating a challenging environment for businesses that relied on China's booming market. The interconnectedness of the global economy means that changes in one region can have significant consequences elsewhere, underscoring the importance of adaptability and resilience in these uncertain times. Political consequences and conclusion. The recent economic slowdown in China is not just an issue for its own citizens. It has significant political implications as well. President Xi Jinping is striving to establish himself as the most powerful leader in China since Mao Zedong, and a thriving economy plays a crucial role in that ambition. When the economy is doing well, people are generally more willing to accept the Communist Party's control as they associate it with prosperity and stability. However, when economic growth slows down, public sentiment can shift dramatically. Citizens may become more critical of the government, questioning its ability to provide for them and maintain order. This shift in public opinion can create challenges for Xi as he seeks to consolidate his power and maintain the party's legitimacy. The slowdown in China's economy also has broader implications for global finance, particularly in its foreign investments. China has historically been a major investor in U.S. treasuries, which are government bonds used to fund public services and manage national debt. As China's economy falters, it is likely to reduce its investments in these U.S. assets. This reduction could lead to higher borrowing costs for the United States, as less foreign investment means that the government may have to offer higher interest rates to attract other investors. For U.S. taxpayers, this could translate into increased costs for public services and programs, as the government may need to allocate more funds to cover its debt obligations. Overall, the intertwining of China's economic health and its political stability has far-reaching consequences that extend well beyond its borders. In conclusion, China's economic slowdown has far-reaching consequences for the global economy, individual livelihoods, and political dynamics. As we navigate this new reality, it's essential to stay informed and understand how these changes might affect us all. Thanks for watching. If you found this video helpful, please like, share, and subscribe for more insightful content. See you next time.